Hello students, welcome to Accounting Explained at AccountWise Academy. This is Latha Venkateshwaran. Dear students, in our previous video, we understood what depreciation is, why it's necessary and what causes it. In this lesson, we will learn how to calculate depreciation using the straight line method and how to record it in the books of accounts. Now, let us see the formula for calculating depreciation under straight line method. So, the formula is depreciation per year is equal to cost of the asset minus residual value. The other name for residual value is scrap value divided by useful life in the years. All these informations will be given in the question. Just you have to take the information and incorporate in this formula. Under straight line method, the depreciation every year will be equal or uniform throughout the useful life of the asset. Now let us take a simple example to know how to find out depreciation under straight line method. Cost of the asset is given as rupees 2 lakhs. Residual value or the scrap value or salvage value all are same. Okay, don't get confused because they may use any word for this residual value. Okay, residual value is 20,000. Useful life is 10 years. Now we have to find out the annual depreciation. How will you find out? Cost minus residual value divided by useful life is the formula, right? So here cost of the asset is 2 lakhs minus residual value is 20,000 divided by useful life of the asset is 10 years divided by 10. So 2 lakhs minus 20,000 is lakh and 80,000 divided by 10 is 18,000 will be your annual depreciation every year till the life of the asset. Here the life of the asset is 10 years. Until 10 years it will be 18,000. Advantages of straight line method of depreciation. It is simple and easy to apply. Easy to calculate too, right? Just now we saw an example. Equal expense every year. Every year we are going to take the same amount of depreciation till the end of the life of the asset. It is not like we are going to calculate depreciation separately for the second year or the third year or the fourth year. We are not going to do in such a way. We will calculate depreciation at the end of the first year and the same amount of depreciation will be taken equally every year till the life of the asset. It is suitable for assets with consistent use. The asset, if it is used in the constant way every year without any change, then straight line method of depreciation is a boon for such type of assets. Limitations of straight line method of depreciation assumes constant use, which may not be true. So this constant use cannot be taken as an advantage here because it is one of the major limitations, because usually we will manufacture according to the demand. The demand may not be the same every year, right? Or the technology may also change. So it may not be the same amount of manufacturing units as we had done with that asset during the initial years when it goes to the end of the years. So this constant use is a major disadvantage. Next point is it ignores increasing repair costs. Straight line method of depreciation does not account for rising repair cost during the later part of the life of the asset or diminishing efficiency over time. So the efficiency of the machinery will diminish over the time because of wear and tear. That is not taken into account under straight line method. May not reflect actual asset wear. That is the wear and tear, it may not take into account. Now we are going to see the methods of recording depreciation. First method is charging directly to asset account, and second is creating provision for depreciation account, that is accumulated depreciation account. In this video, I am going to teach you straight line method under charging directly to asset account. Under method 1, let's see the question which we saw already and do the journal entries and the ledger part. Okay, I will tell the question once again. Okay. A company purchases equipment for rupees 2 lakhs on 1st April 2022. Its useful life is 10 years and the estimated residual value is 20,000. Calculate annual depreciation under SLM method and show the first year's journal entries. So first we have to find out the annual depreciation. You know how to calculate it. I will just tell orally. We have done that part previously. Okay. Refer to that part. So the depreciation will be cost minus residual value. That is 2 lakhs minus 20,000 divided by 10. That is 1,80,000 divided by 10 is 18,000 will be the depreciation amount. Let us see the journal entry part. Okay. For journal entry, you all know the format. It is date, particulars, debit column, credit column. I am using this column just for explaining you. No need to use this column for your exam. Okay. Or write this column for exam. This is only for your explanation. Now, we have purchased equipment on 1st April 2022. So, on April 1, 2022, when you purchase an equipment, the asset value is going to be increased. So, equipment has to be debited. Equipment account debit. On the debit side, 2 lakhs. Purchase of equipment is the explanation to bank account. How we are going to buy the equipment? By giving a check. Okay, through bank. So, the bank value is going to be reduced. Bank balance rather. When the bank balance reduces, it has to be credited because bank is an asset. To bank account, rupees 2 lakhs. Payment for equipment. Now the narration is being equipment purchased. I am not writing a narration in the journal. I am going to tell it only orally. Okay. Next, March 31, 2023. We have to charge depreciation at the end of the year. Depreciation is an expense. When the expense increases, it has to be debited, right? So depreciation account debit 18,000 and from where the depreciation amount will be taken? From the equipment account. So equipment account is going to be reduced. Asset value is going to be reduced. So credit asset account to equipment account 18,000. First, depreciation is annual depreciation and equipment account is charging depreciation. Narration for this is being depreciation charged. Okay. Next, March 31, 2023. We are going to transfer this depreciation to the P&L account. Because it's an expense, it has to go to the P&L account. Okay. Now, in this journal, we have debited the depreciation. When you're going to transfer, we have to cancel this debit. How will you cancel this debit? By crediting it. So we have to write to depreciation account 18,000 and where you are going to transfer P&L account that has to be debited. P&L account debit 18,000. First is transfer to expenses and second to depreciation account is closing depreciation account. And the narration for this is being depreciation transfer to P&L account. Okay, in this way you have to pass the journal entries. Next we are going to see the ledger posting. Okay, now students, if you like my video so far, please give a thumbs up to this video and subscribe to my channel so that it will encourage me to make more videos like this in the future. Thank you students. Let's do the ledger posting. By this time you should be thorough with the ledger format and posting of journal entries to the ledger accounts. Anyway, I will tell you the format now. First entry is on April 1, 2022, equipment account debit to bank account. So first we will open the equipment account. The format for any ledger account is DR on the left side and CR on the right side. And we have the columns of date, particulars amount, date, particulars amount. And here you can also open the column of JF that is journal folio. Okay. First entry is equipment account debit to bank account. Opposite of equipment account is bank account. In the journal, we have credited the bank account. So, in the equipment account, we are going to debit the bank account to bank account on April 1, 2022, 2 lakhs rupees. Here, what I am going to do is, first I will close the equipment account and then go to the depreciation account and bank account. So, the next journal entry pertaining to the equipment account is depreciation entry. On March 31, 2023, we have passed the entry as depreciation account debit to equipment account 18,000, 18,000. We have opened the or we are doing the equipment account. So in the journal entry, opposite of equipment account is depreciation account. Journal entry, it is debited. So in the ledger of equipment account, depreciation will be credited on March 31, 2023 by depreciation account 18,000. Now we have passed all the journal entries for the year. Now we have to close the equipment account. Okay. Now if you see the balance of debit side is more when compared to the balance of the credit side. So we will take the balance or total of the debit side 2 lakhs to the credit sides as well. Okay. Now, if you deduct 18,000 from 2 lakhs, you will get a balance of 1,82,000. Okay. That will be written as March 31, 2023 by balance carried out. And this will be again brought forward on April 21, 2023 as two balance brought on 1,82,000. So what we infer from this is as on April 1, 2023, book value of the equipment is 1,82,000. Okay, if someone asks you, what is the book value of the equipment as on April 1, 2023? You can easily say it as 1,82,000. Okay, this is how you are going to do the equipment account every year. Okay, next let us open the depreciation account. The first journal entry we have passed for depreciation account is on March 31, 2023. It is depreciation account debit to equipment account 18,000, 18,000. So if you see in the journal entry, we have credited the equipment account by rupees 18,000. So in the ledger of depreciation account, we are going to debit the equipment account as on March 31, 2023 to equipment account, and the amount is 18,000. Okay, again on the same day, we have passed the journal entry of P&L account debit to depreciation account. In the journal, we have debited the P&L account by 18,000. So in the ledger of depreciation account, we are going to credit P&L account by 18,000 on March 31, 2023. As we have already seen, depreciation account is tallied. We are transferring it to P&L account just to tally the depreciation account. So both the debit side and the credit side are equal and it is tallied. So write the total of 18,000 on both the sides. This is how we are going to prepare the depreciation account. Let's see how we have to present the equipment in the balance sheet. Okay, so balance sheet as at 31st March 2023. Left side is your liabilities, right side is your asset. Equipment will be shown on the asset side, correct? Yes. So equipment at cost is rupees 2 lakhs less depreciation is 18,000. Okay. Now the net book value is 1,82,000. This is how we have to show the equipment in the balance sheet. Let's see a quick summary of what we have learned so far. Okay. We know how to calculate depreciation using the straight line method now. We prepared journal entries, we prepared ledger accounts, and even we saw balance sheet presentation for the asset account. We also saw how depreciation will impact the profit and loss account. Okay, now my sincere advice to you is to practice more examples to strengthen your understanding. Subscribe and stay tuned for more videos where in the next video I am going to teach you straight line method of depreciation using accumulated depreciation or provision for depreciation. Like, comment your questions and share to help fellow learners. If you have any doubts, comment below and I will help you out. If you would like to inquire about the online classes which I take or to get more worksheets, you can contact us at acc.wiseacademy@gmail.com.